Hello everyone and welcome to Excellence Forum's ABCD of Accounting. I am CA Priya Joshi and we are conducting Income Tax Literacy Series. Friends, right now we are discussing the income from house property. In the last video, we saw certain basic provisions regarding the same. In this video, we'll see some highlights and most importantly, illustration for computation of income from house property. Friends, in the last video we saw that a house property as per this act includes both residential as well as commercial properties, and the assessee needs to be the owner of the house property during the previous year for which we are calculating the income. The house property should not be occupied for his own business or profession, because in such case any income or expenditure for that property will be forming part of income from business or profession. Any house property situated in foreign countries will be taxable according to the residential status of the assessee. In case of joint ownership or co-ownership, the assessee's income from that property will be only restricted to his share in the ownership of such property. Next is important, if the assessee owns more than one house property for self-occupancy, then only two, that is maximum two of such properties can be considered as self-occupied, and the rest properties has to be considered as deemed let out, and deemed rental income has to be taken into consideration. Of course, in such case, the assessee can choose which properties he wants to consider as deemed let out. Then, in case of interest on pre-construction period, if there is any interest paid by the assessee for pre-construction period, then it will be allowed in 5 equal installments, and that will commence from the previous year in which the house is acquired or constructed. Then the last is important. The total loss under this head, that is income from house property, can be set off only up to rupees 2 lakhs for a particular assessment year. If there is more loss than rupees 2 lakhs, then it has to be carried forward to subsequent assessment years, and it can be set off against total income for subsequent years. But again, it is allowed only up to 8 years, and if there is still some loss remaining, it will get lapsed. Now we will see the illustration to understand this in more better. Let's take an example of Mr. X. Suppose he is owning a house which is self-occupied. There is another house which is let out, and he is also owning a shop which is again a let out property. In the first case, that is a self-occupied house, the gross annual value will be nil because there will be no income from such property. So, of course, there will be no deduction for municipal taxes as well. But he can avail the deduction for the interest on loan for that property paid during the year. So, in this example, I have taken that as 50,428. So, this will be net loss from the house property 1 for Mr. X. The next example is a let out house for which we will consider that suppose the gross annual value or the rental income is rupees 2,16,000. Then the municipal taxes can be deducted from such income, and the other deductions allowed are standard deductions of 30%, which is for repairs of that property, and the whatever interest that he has paid for that property, interest on loan, that is also allowed as a deduction. So the total loss for this particular house property is coming as 2,17,095 rupees. In the third case, which is a shop which is let out, suppose the gross annual value or rental income is 3 lakhs. He has deducted the municipal taxes from that. Again, standard deduction of 30% of net annual value, and interest has been paid of rupees 3,36,792. So the total loss for this particular shop is 1,32,000 692. So friends, if we consider all the house properties in totality, the total loss for Mr. X with respect to income or loss from house property is 4 lakh 215. But for a particular assessment year, that is this year, he can avail only rupees 2 lakhs, and the remaining 2 lakhs 250 will be carried forward to the next year, and that can be adjusted against the income from that particular year. Hope this illustration is clear to you, friends. If you have any particular case to be discussed, or if you have any question on this particular illustration, please write to us. Please comment, like, share and subscribe to our video. Also request you to visit our Facebook and Instagram page on the given address. Thank you, friends.